Welcome back, everybody. It's good to have you to another real estate market update for the greater Milwaukee area, this time June 2025. We're almost at the halfway mark here for the year, in the middle of the spring market, the busiest time in the real estate industry, and we are talking about US home prices are falling. This is probably the most profound shift into the red. As long as I've been doing this, we're going from a seller's market into a buyer's market, at least on a national level. The question is, of course, what does this mean for us locally here in the Milwaukee metro area? Why is this happening in the first place, and what can we expect here for the near future? I'm sure you've seen it on the news. US home prices are down in 27 states now. A lot of negative headlines that are concerning people around the housing market. And of course, if you're looking on the internet, there is plenty of clickbait about a real estate market crash. That stuff always starts to surface. And of course, this is concerning a lot of Americans. Here's a new survey that shows 70% of all Americans are now concerned about what's going on in the real estate market, and is there going to be a housing market crash. Memories of 2008 are coming back. Spoiler alert, that is not going to happen. There are very profound reasons why not. And as you know me, I'm a data guy. So let's take a look at the latest numbers right out of MLS. So we're seeing big changes here. We are seeing inventory up 51.7%, almost 2,000 units on the market. This is really great news. If you are a buyer, you have a lot more choices, a lot of inventory to choose from, and a little bit better negotiation power if you're going into this. But at the same time, take a look at the historic numbers. You have them here below. Before COVID, we had around 2,600 units on the market, and in 10 years ago, we had about 6,000 units on the market. So that was considered a normal market back then. So yeah, inventory is up, but take it with a grain of salt. It's still not even close to where we used to be in normal times. Sold units is down 10%, only 1,100 units, so a very compressed marketplace, not too many transactions happening, but still very fast. On average, only 5 days on market. That is very quick for real estate transactions. And that is kind of what we've seen over the last years, usually in the summer market. Winter is a little bit slower, but this is typically what we would expect here for the spring market. What I didn't expect is that the median sold prices in May were coming in relatively low here. I think this is the lowest plus 0.26% that I can recall here anyways. I would have expected that we're breaking the 400,000 mark here this year in spring. Not happening. But if you look below, you have the historic numbers. You can see where we actually came from. So what are some of the market trends that we're seeing? May has really been influenced by a lot of uncertainty that came around policy and economic issues. We've seen a lot of concerns about a recession maybe coming in the second half of the year, about tariffs, what that means for the economy, is inflation coming back? And that has really left an impact on buyers, on sellers, and also on real estate agents. And you can see that in the data. I'll show you in just a minute. Median sold prices in May were lower than in April. This is totally contrary to what we expect normally in the spring market. We have every month, we have a progression. It's building on the month prior. So the fact that last month we had 385,000, I think I recall, and now we're down actually to 381. That is really unusual. So when you zoom out a little bit and you look at year to date, we are still up 8.53% compared to 2024. It's just May was a really weak month in the real estate industry in Milwaukee. We're seeing a lot more cash offers now. I think that has to do with a lot of people feel uncertain about leaving money in the stock market. There doesn't seem to be too much upside potential there, but there are concerns about downside. At the same time, mortgage rates are relatively high, so a lot of people have extra money on Wall Street, and they're moving it into the real estate market because that seems to be, to them, the safer bet at the moment. I think that's the reason why we're seeing especially the luxury home market extremely competitive, especially at homes that are updated, that are move-in ready. With the real estate market actually being a little bit more muted, you would think that competition, especially on the high-end side, is going down. As some of my clients can actually confirm to you, this is not happening. The market remains very competitive in that price segment. We had a few accepted offers. Some of them have also been able to negotiate, but not everybody is succeeding. Very competitive. Competition in the more entry level and middle price points is easing, in fact, a little bit. So that used to be the most competitive price range, where we have seen first-time home buyers really competing very, very hard. I think they're getting affected a lot more with the higher mortgage rates, and that's the reason why we're seeing, instead of 5 offers and 8 offers, we're maybe seeing just 2 or 3 offers on a typical deal. So that is coming down. Mortgage rates have remained right around 7%. So depending on your credit, that you might be in the high 6s or low 7s, and that's been relatively consistent. May was a relatively soft market here in Milwaukee, but June is already picking up with a little bit of a different vibe, and that starts feeling a little bit more healthy. Maybe that's surrounding that we have more clarity on what's going on with tariffs, and that is impacting the psychology in the market. So, and as far as what Milwaukee County, this is specifically Milwaukee here, concerns, we are very much here in a seller's market, almost as far left as we can possibly be. We would have to go a long way to even make it to a balanced market or to a buyer's market. This is calculated based on the numbers here below. So we are far away from seeing prices plummet in the Milwaukee area. And that is really the big question. If you're currently in the market, how do you time it? Should you wait? Is now a good time, etc. If you're thinking about moving, I would say definitely let's talk. It really matters who you're working with. And if you want to have a quick chat with me, the easiest way of getting a hold of me is sending me an email at m.auerbach@kw.com. You have it here on the screen. You can also give me a call. That is my cell phone number. Just don't be surprised if I'm actually picking up, because that's what I do. Or if you want to schedule a phone call or a Zoom call with me, you can do that on onpointrg.com. There's a red button that says schedule a call with Marcus. Just pick a time that works for you, and then I'll see you for a quick chat on Zoom. All right, with that, let's go back to the data. So here we have what's going on with Milwaukee list prices. This is the Milwaukee metro area, so 4 counties. And when you look at the blue line, this is for sale. So this is what people are putting out in terms of asking price. This is really surprising for the spring market that we are flat here. Normally you would have expected a continuation of this trend that we're seeing, that we're going up in May. We did not, we just flatlined, and that is really surprising. And you can see it also here on the sold. So this is what people have actually negotiated and then closed on properties. That is actually going down a little bit, and this is really unusual for a spring market. You might be wondering, why is there such a big discrepancy between asking price and sold price, even if the market is as competitive as it is in Milwaukee, and we'll talk about that in a second. The reason is that not every home is selling. We had in the metro area almost 1,000 homes that have not sold so far this year. They were put on the market. Either condition was not right or price was not right. They were not positioned correctly, and they did not sell. They went what we call expired. And that is the difference between the median list price and the median sold price. This is so those were unsuccessful sellers that went on the market and did not succeed. When we look at month of supply, that illustrates really well how much the market has changed in the month of May. That is a jump like we almost never see it. Normally we see a lot more gradual change here. Month of inventory, a month of supply is like saying, how much milk do I have in the fridge for my family? Will it last me for 1 week or 2 weeks? We do the same thing with months of supply. So how long will the inventory last with the current demand? And what happened in May is that buyer demand went down a little bit, inventory went up. And the combination of that both means that you can stretch the existing supply a lot further. And we have seen a very big shift really in the month of supply. So this is very unusual. And the more confusing part is here that we are still in a very, very competitive market. So the listings that are selling, that are positioned correctly, priced correctly, look stunning, they still sell very, very competitively. And that is really confusing to a lot of people, because you can see here that from April to May, we went up. The market has gotten more competitive. If you're not familiar with this metric, I have it every month here. The sale to list ratio is basically how much have people paid over or under list price on average. So in this case, we are at 102.9%. That means on average, buyers have negotiated to pay 2.9% more than the seller was originally asking. Why are they doing that? Because there are multiple offers and they really want to have that house. So they're offering more money than the other buyer would in order to get that house under contract. So everything over 100, this is the 100 line here, we are in competitive territory. And if you have multiple offers, that of course the buyers are creating upward pressure on prices. And that is, still happening, at least with the listings that are selling. Keep in mind, there's a lot of them that just are not selling at all. They're getting zero offers. So Zillow is forecasting that US prices are going to fall this year. On May 21st, they came out with the forecast of minus 1.4%. You have to keep in mind, context always matters, that this is now more optimistic than prior, because a month earlier they said they are going to fall 1.9%. So 1.4 is actually an improvement from the more pessimistic view that they had a month earlier. And this is really a price correction and not a market crash. I think it's very important to understand the difference, because when people are saying, oh, I'm waiting until houses are getting cheaper, then I think in their mind they're hoping for houses to be 10% or 20% lower. 1.4% or 1.9% really does not make that much of a difference, especially if on average people are paying 2.9% over list price. So what is actually happening here? I think this chart is really helpful to explain the dynamic, because Zillow is saying across the entire US, across all of it, we're going to see minus 1.4% for this year. But a lot of the negative markets here are in the south and on the west coast. The northeast and the midwest are still here in the blue territory. They're actually calling out Milwaukee here with plus 3.6% year over year. So Milwaukee is, according to that statistic, still forecasted to see a positive home appreciation. But overall, as a country, there are so many markets that have turned negative, that have seen such unbelievable, crazy home price increases in 2021, 2022. So they are now consolidating a little bit. They're settling down a little bit. And overall, if you take the average for the entire US, then you see a negative 1.4%. At least that is Zillow's opinion at the moment. We'll see what they say next month. All right, the reason we are seeing such a shift in the market, I think, is really well illustrated with this. You may have heard the numbers in the news. We have currently 1.9 million sellers versus only 1.4 million buyers. So if you think of this as a game of musical chairs, there are going to be about 500,000 houses left at the end of the day that don't have a buyer. And this is what's opening up here. And this is why the dynamic is changing. That's the first time that we have more sellers than we have buyers since basically back here in 2019. Then the pandemic happened. Everybody started moving and buying bigger homes. And it went totally the other way. So in this period, home prices really went up because everybody wanted to buy. We had very few sellers. And now we are seeing the opposite of that dynamic, at least on a national basis. What has also happened, and I think that is important to understand, is because of this dynamic here, home builders totally went into overdrive, especially in the southern states. We have seen really vast numbers of new home construction, apartment buildings coming online. As you know, if you drive around in the Milwaukee area, there is not really that much new construction going on. You're seeing a few smaller subdivisions here or there adding, 15, 20, 25 homes here. Numbers are too low. There's not enough from them. And then it's also the price point is too high. New construction entry level is now around $550,000 to $650,000 for a lot of first-time home buyers. That is simply not an option. Let's take a look at the markets that are really hit the hardest. Those are southern states. We have a list here. It's mostly Florida, Texas, Arizona, Nevada, Tennessee, also Georgia and South Carolina that are making the list here. I think this is the top 16 or 17. And I'll take Miami here, for example. We have almost 22,000 home sellers and only 7,000 home buyers. Of course, that is creating a very different dynamic in a real estate market, and that is giving buyers a lot of power to negotiate. As you have seen from the Milwaukee numbers, we have the inverse situation. So we still have a lot more buyers than we have sellers in Milwaukee. But it's not only the retail market where homes are sold. The rental market is very similar. I have here some recent data from the rental industry, and you can see the Midwest is also leading here with a 3.4% rent increase on an annual basis for the Midwest market. That's the most of all the regions. For all of the US, it's only 0.7% rent increase this year, but the Midwest is also seeing rents going up for two reasons, the same as in the housing market. Number one, our prices are still lower than the national average. You have your rent, for example, at $1,871. If that is the average effective rent. In Milwaukee, we're just over $1,500, so we're quite a bit below the national average, and that's the reason why you see that upward pressure. So the biggest increase in the Midwest, and Milwaukee is right on top there as well. What's going on with mortgage rates? Basically not too much at the moment. It's really extremely hard to forecast anything. As you know, if you're following my channel, mortgage rates are not set by the Fed. They are by the Federal Reserve. They are set by the bond market. And there is a lot of concern at the moment what's going on in the bond market. If you're interested, follow the 10-year Treasury bond. That is really what's driving the mortgage market. And there are a million reasons from global economics to global trade that feed into the bond market, into the US dollar is still the world reserve currency, but the dollar has weakened a lot. So all of these factors into mortgage rates. And that is at the moment crazy difficult to predict, because 5 of these factors are pointing up, 7 of these factors are pointing down, or the other way around. It's hard to say. So I don't know where mortgage rates are going to be going. They're always difficult to forecast, but we have been in this right around 7% bandwidth now for quite a while, and that's where we currently are. If you have perfect credit, you're going to be just under 7. If your credit is less than perfect, then you might be just a little bit over 7%. So what can we expect for the next few weeks here in the Milwaukee market? The economic outlook remains uncertain. Things are changing frequently. So with that, also the market psychology changes. And all we can do is really monitor the impact and seeing in real time how it plays out. June has already started relatively hot here in the Milwaukee area. So after seeing as an agent what was happening every day in the market, talking to buyers and sellers, talking to my clients, I could feel the market shift in May, but now in June, it's already looking quite a bit different. So will be interesting to see where this is going, but at the moment it is looking like things are ticking up again. We're possibly seeing even more cash offers as people are liquidating portfolios. Of course, naturally, that especially with higher end properties, new listings will slow down by the end of June. So if you are on the buyer side at the moment, the next 2 weeks, you will basically still see quite a good number of new listings hit the market here. But then the week before 4th of July and the week off, it's going to slow down. With the market usually takes a little bit of a break here. People are thinking more about vacation and going up north than selling or buying real estate. So we're getting a little bit of a break here. And then we're in July. We are transitioning typically into a much more stable summer market. So spring market is always crazy, and then summer market is usually a little bit more stable. Still a very, very good opportunity both for buying and for selling. We see then a little bit more activity again around back to school time, when the majority of people are back from vacation, and then it starts slowing down into October, November, and Thanksgiving. That's kind of the usual cycle that we're observing every year. If you're thinking about making a move in the second half of the year, bring me in early so I can help you with the strategy, especially with how to get your home ready. A lot of people are spending too much money on doing things that will not give them a positive return on investment. And at the same time, we're seeing people bringing houses on the market that are not positioned well, that don't look very good, and then they end up being expired and are not selling at all. So bring me in early, then I can help with those strategic decisions and get your house ready and positioned correctly on the market. The same thing on the buying side. Don't assume that automatically you have to go offer aggressively over list price. A lot of listings are selling with the negotiated, with the discounted price, and some of them are actually so overpriced that they're not selling at all. So the trick really is to know when you look at a listing, which one is it? Is this one where we have to offer over list price, or is that one where we can negotiate down? You have a lot of money at stake, and it really matters who you work with. So that's where we can help. So if you want to have a quick conversation with me about your personal real estate plans for the second half of the year, feel free to give me a quick call. Just don't be surprised if I actually pick up. You have my number here on the screen. It's also in the description below. A lot of people prefer to actually send me an email. That's m.auerbach@kw.com. And you can always book a call with me, a Zoom call or a phone call. Just take a look at onpointrg.com. And there's a button that says schedule a call with Marcus, gives you my schedule, and you can just pick a time that works for you, and then I'll see you here on your screen on a Zoom call. And that's basically all I got for you this month. Thank you very much for watching. I'll see you at the next one.